What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AAPL for Apple Inc., of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talk about the stock regularly here on the channel, and today we got a beautiful consolidation bar in the upper 50% of yesterday, Monday's range. Of course, that's the bar that firmly took us up and over the daily 50 SMA and really, planted us firmly above 168, right? Technically, there was a possibility for something that would have looked like that, but it didn't happen, right? So the chart is fairly bullish here. Now, a break of the two-day highs after this day of consolidation should technically take us to 177.50, the lower high that was set here after the all-time high. From there, just monitor for continuation, right? 181 is really the next structural resistance we have overhead. To the daily, on the daily time frame, if a breakdown occurs, it's got to be under today's low, and in that case, I would watch for a higher low to form from this perspective around 168. We know that's the critical must-hold area simply because it was the bottom end of the range for support, and support once more before that little panic breakdown did happen. So Apple, extreme relative strength out there in the marketplace. Let's take a quick look at the 30-minute time frame just to see how the price action is unfolding. I mean, there's literally nothing about this that would say bearish, right? This activity here, picture perfect bull flag consolidation. Even this, this right here, that pattern, it's a double bottom, right? So we have touch one, touch two, necklines up here. That's the two-day highs. If it breaks, then we know what the target is, 177.50s. If it's going to be a breakdown, we know it's underneath today's lows, as we mentioned, right? That's 172.30. If that happens, it's all about the backtest of 168. You can see there's very little structure in that area, so I would imagine that is the area we go to if a breakdown does occur. But when we get there, notice how there was two-sided action in the past. I would imagine that we find some sort of footing there and then either go for a bounce or a breakdown. We would have to reevaluate the price action when and if that does happen, but based on everything we're seeing in front of us right now, nothing about this chart is looking bearish. We would actually start to look for breakouts up and over the neckline of this double bottom for follow through into that daily 177.50. That's going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.